Hi everyone. Today I'll be talking about the result-based short volatility strategy, which I trade during the earnings seasons. And this works on the principle that once a company is about to declare its result, it will have a highest volatility, which will crash once the results are out. And by selling a straddle just or a strangle before results are out, some money can be made there, which is true in most of the cases, but then there are some pitfall also, which we'll see. So the earning seasons for most of the Indian stocks, they will start from mid of the quarter, beginning like January 14, 15, in same way April 14, 15, and then it runs for a month or so, and we have to then take trade in those stocks which are kind of liquid in nature. I mean, where the options are kind of liquid in nature. So how I select that, I'll just show you here. So first reference point is the Opstra, where we have a free option where we can go into this options menu and select the results calendar, and here we can see how the different companies are declaring their results in a given in that particular month. So this is the first tab, like it gives me the name of the stocks where the results are coming, and then I have to see like where the liquidity is more. So to see that, I generally go to the option chain in the Nifty. So how I work it out is, say, take an example of the 25th of July when the results are coming. So we'll compare Tata Motors and L&T. So I select those stocks where the results are about to come after market close. Two reasons for same, that one is like if you are doing a job, it is very difficult to track when the results are about to come, because here the critical point is you have to enter in just very few minutes before the results are out. If you enter very early, then also you can have some loss. If you enter after the results are out, anyway that opportunity is gone. So if you want to trade in a stock where the results are coming during the day, a lot of follow up is needed to make sure the results are not out and you enter just before the results are out based on the historical information, because the time of the results are never disclosed. So mostly I pick those stocks where historically it has been where results come before the means after the market close. So L&T and Tata Motors are two such stocks. So how I see is, generally like this button will give us the historical information whenever the results are out, but somehow it is not working. So what we have to do is we have to just click on this part. It will open a new page. Like I don't have a plan for it, I am using a free plan, but once I go back to the original page, I can see the historical results. So like say for L&T also, it is coming after market close, and the same is for Tata Motors also. If I click on that, so most of the results are after market. So here we can see like on few days for Tata Motors the result has come during the market, before the market close. So if I'm going to take a trade, so generally I will open a trade at 5 minutes before the market close. So in such stocks where there is a possibility that result might come before the market close, I have to check whether results have not been declared till now, only then take a trade. If results are out, then there is no use of taking a trade, I mean this trade. So that is one consideration which we have to take. And one example where I recently took a trade where historically it used to be declared after market, but it came before market close this time, was Ashok Leland. So where historical information was saying it should come after market close, but it came on last Friday around 11:15. So first we'll see like how I identify the options are fluid, or means there is enough liquidity there. Again, different people can have different ways. So what I do is I go to this option chain, and like say I have fetched the Tata Motors here. So I generally see the ITM options. So for ITM options, you can see for generally CE options will have liquidity on both sides, like OTM, ITM. It is mostly the PE options where the liquidity is less. So here you can see like till 3 4 down the means ITM options which are away 3 4 strikes also have good liquidity. Means liquidity is like open option. These are open interest is there, and then the enough volume was there on Friday. Means we have to check for the day when the result is coming. But if it is good volume on say last Friday, then Tata Steel results are coming on I think Wednesday or Thursday. So mostly it should be there, but this check should be done before the results are to be announced. So let's say for L&T, if I see L&T is less liquid because if we go like 3 4 strikes away in the ITM PE side, we can see there is very less open interest and very less volume. So what happens is, in case there is a huge movement after the results are declared, then it will be there will be a widespread bid ask ratio in such cases, and we might lose little bit because of that also. Means anyway one loss will be because of movement of the options price, and other will be because the bid ask bid ratio will be very wide. So that is the one way to find out the liquid options. So once we have done that, then before taking a trade, we have to verify whether the results have come in or not. So how to do is again from the this side, from the Nifty site, NSE side, we have to go to that equity, and there this corporate disclosures are there. So if any results are there, they will update it here. Like we can say Ashok Leyland result was updated here around 11:05, saying that the result is declared. So I didn't check it, but ideally it should be checked at before 15 means before 3:25 when the trade is about to be taken. And if the result information is not there, then only that trade has to be taken. So these are the few things to look out before we take a trade, and these are the few stocks like based on the liquidity, and then if the results are coming after the market close. So this is the list of such stocks, and again the list can change because sometimes the results might be more closer to monthly close, making it less viable. So that point also we'll discuss, because sometimes if the results are coming into the week when the monthly expiry is falling, the premiums will not be enough in case a big move comes. So if say we'll take an example, say for I think Tata Steels. So say an example of like 24th, so today is 23rd, so 24th, if I check for this Tata Steel, its results are coming after market close historically, and then if we look into the straddle price at current, so if you see the price of the straddle, the options price are very less, like 2 point CE and just 2 point P. If there is a big move, like even more than 2 or 3% move, it not the option price are not pricing that at current. So it's better to avoid these. Means if the premium is not much because of near to the monthly close. So the week of monthly close is always risky because of this, because premiums will be very less, and if a move comes, then it will wipe we can go into a lot of loss. So yeah, so with the loss, I want to cover one thing here, like this is a high risky trade. So here loss can be big, and again what we have to do is we are taking a trade just before market close, but we should not square off the trade just after market open. We have to either wait till 9:30 so that the volatility dies down, because what happens is whenever a big move is there, even the volatility will remain after the market open also. Like initial 5 minutes everyone will try to go out, will try to square off the positions, which will increase the prices in the direction where the move has come. So we want to avoid that situation, so we have to hold it. And sometimes what will happen is even if you hold it, if the move is increasing in that direction, you will go on more losses, but that is a risk which has to be taken. Otherwise if the volatility is at the same level when the trade was taken, because of this big move, then the loss might be bigger in most of the cases. So in some cases, like say where 13% stock has moved 13%, 14%, you might get a loss of 40k per lot also. So like the biggest loss was in Emphasis, but this was a combination of two factors. One is the move was around 13%, and then the options were not liquid. So there were issues in exiting from the trade. And then the other thing which we have to take care of this is like when we are so what happens is, once is you enter the trade, and when you are trying to exit, you have to exit both the sides C and P as fast as possible, like whenever you are exiting. So what happens sometimes is, if you are doing it manually, you might put it a limit order, or maybe C gets executed, and if the move is towards the, if say price is falling down, then P will not get executed, because the P price will keep on increasing. So you will keep on going into the losses. So either you have to get it at whatever price it's there, which is kind of a market price. Again, some brokers don't allow you to put a market order for the stock futures in stock options. So that's where I use this TradeTron settings. So here this is the real day short strategy which I use. So again some things are common here, like trade is taken after 325, and it will just take in the ATM option. So we'll also talk like when it is better to just go for short straddle and short strangle. So we will touch base on that also. And so it will take the ATM short straddle at that point, and then on next day it will square it off after 9:45. Again it can be 9:30 also, means anything between 9:30 to 9:45. We have to avoid that 9:15 to 9:20, because as we discussed earlier, if the move is huge on one side, the volatility will not die, it will remain. And so here is the main thing. So what it says is it will try to buy the option at the LTP, whatever is the LTP, but it will revise it by 25 paisa. So one tick is 5 paisa, and it will try 20 times like that, and timeout will happen after 3 seconds, after which it will say error. So it will so 5 so 25 paisa into 20 is kind of 5 rupees. So it will increase the option price by 5 rupees within the few seconds, like within tick by tick, if it is not getting the desired price. So this is just to make sure that we buy both C and P instead of just leaving it there. But sometimes what when I was doing it manually, like C used to get executed, but P, then I'll be putting limit price and hoping that it might come back to that limit price, but it will keep running on the other direction. So we want to avoid that. And algo trading is means because of this, like I don't have to make any manual decision. So that's where the main use of this strategy. It is just a manual one, because once a result is declared and so now say if I want to take a Tata Motors, I'll just change it here to Tata Motors and then reactivate it. So these all positions are adjusted manually. Only thing is this exit condition uh, for which this thing is used, and once I put it, it will automatically take a trade and exit it, means I don't have to monitor it. So that is the other thing. Anyway, that is true with the algo trading. So that with that being discussed, so mostly what happens is if the strikes are very near, like say 10 point, it is better to have a straddle. But some stocks will which are bigger in value, and they will have 50-point strike or 100-point strike. So I think one such stock might be, yeah, this LTIM. So LTIM was also not that liquid, but I took it, means anyway there was not much loss or profit. So if we see LTIM, we can see the strike are 50 point away. So sometimes what will happen is maybe the future price is between these two, like say future price is 4975, then we can take a triangle like 4950 PE and 5000 CE. So there we have to manually edit the strategy. So we can just enter the strike price also. So this one is like we can just put the strikes also, whatever we want to take, and use it to make a triangle. So that is the other point which we have to take care, so that it becomes neutral in the definition. Otherwise it will be more on the bullish side or bearish side if we go by straddle at that point. And yeah, so that's what is all about this strategy. So again, it is a high risk strategy, and in nowadays I've taken a stop loss as 25k if the overall stop loss is stop or the loss is going below that, then this strategy will be stopped for that earning seasons. And yeah, the other thing is sometimes in the stock selection, like some stocks are more volatile as compared to other stocks when the results come. So I have not analyzed much on that side, but if we see like say take an example of Infosys. So this earning season, if we see there is a huge drop when the earnings came, and last earning season also the same case. So one analysis can be done like how many times such movements have happened. So like say if it is more than 50% or so, then it is advised to not to take trade in that kind of stock. So that is anyway, means I have not done analysis at that level, but Infosys I know, because I monitor these stocks like where I trade. So that is the other thing which need to be considered and can maybe further improve the chances of success in the strategy. So that with that, yeah, we'll end this session. Thanks.